Welcome back to the channel. Today, we're diving into the top 10 assets that can make you rich. Whether you're looking to invest or just curious about wealth-building strategies, this video is for you. Building wealth takes time, effort, and a solid understanding of your risk tolerance. There's no magic shortcut to becoming rich overnight. However, by investing in the right assets and making smart financial decisions, you can set yourself up for long-term financial success. So, with that said, let's jump into the 10 assets that have the potential to make you rich. Alright, let's kick things off with real estate, a historically proven asset class that's been a cornerstone of wealth building for generations. Think rental properties, commercial real estate, even land. The beauty of real estate lies in its income-generating potential. Rental income can provide a steady cash flow, helping you build equity and grow your wealth over time. Historically, real estate tends to increase in value over the long term, especially in desirable locations. Plus, there are tax advantages associated with real estate investing that can save you money and boost your returns. But remember, real estate isn't without its risks. Market fluctuations, property maintenance, and tenant issues are all factors to consider. Don't be afraid to start small. Consider investing in a smaller rental property or even partnering with someone on a real estate deal. With careful planning and a long-term mindset, real estate can be a powerful engine for wealth creation. Next up, let's talk about stocks. In simple terms, investing in stocks means owning a piece of a company. When you buy a share of stock, you're essentially buying a small ownership stake in that company's future earnings and growth. Over the long term, the stock market has consistently trended upwards. Sure, there will be ups and downs along the way, market corrections, recessions, even crashes. But historically, the stock market has always bounced back and reached new highs. That's the power of compounding returns. When you reinvest your earnings back into the market, your money has the potential to grow exponentially over time. It's not just about picking random companies and hoping for the best. You want to invest in strong, fundamentally sound businesses with a solid track record of growth and profitability. Think about companies that are innovating, disrupting industries, and have a competitive edge in the marketplace. Remember, investing in stocks is a marathon, not a sprint. Stay informed, do your research, and focus on the long-term growth potential of your investments. Now let's shift gears to a more conservative asset class: bonds. While stocks represent ownership in a company, bonds are essentially loans you make to governments or corporations. When you invest in a bond, you're lending money to the issuer for a fixed period, and in return, they agree to pay you regular interest payments. At the end of the bond's term, you receive your principal back. Bonds are often considered a more stable investment compared to stocks. Bond prices tend to be less volatile than stock prices. This makes bonds a valuable tool for diversifying your investment portfolio. By including bonds alongside stocks, you can potentially reduce the overall risk of your portfolio and smooth out your investment returns over time. Government bonds issued by the U.S. Treasury are generally considered among the safest investments you can make. Bonds are an essential component of a well-rounded investment strategy, providing stability, income, and diversification to your portfolio. Chapter 4. Not everyone has the time, expertise, or desire to research and select individual stocks or bonds. That's where mutual funds come in. Mutual funds are like investment baskets that pool money from multiple investors to purchase a diversified portfolio of assets. Instead of trying to pick winning stocks yourself, you're essentially hiring a professional fund manager to do the heavy lifting for you. These fund managers have the experience, resources, and expertise to analyze markets, research companies, and make informed investment decisions. And because mutual funds invest in a wide range of assets, they offer built-in diversification, which can help reduce the impact of any single investment on your overall portfolio. This diversification is especially beneficial for investors who are just starting out or those who don't have a lot of money to invest. When choosing a mutual fund, it's essential to consider your investment goals, risk tolerance, and time horizon. Mutual funds can be a convenient and effective way to invest in the markets, offering diversification, professional management, and accessibility for investors of all levels. Chapter 5. If you like mutual funds but want more flexibility and lower costs, Consider exchange-traded funds, or ETFs. ETFs offer diversification by investing in a basket of assets. They trade like stocks, allowing intraday buying and selling. ETFs typically have lower expense ratios than mutual funds. They track specific market indices or sectors, reducing management costs. This range of options helps tailor investments to financial goals and risk tolerance. ETFs are popular for their flexibility, cost-effectiveness, and diversification benefits. Chapter 6. Let's dive into the world of cryptocurrencies, a relatively new but rapidly evolving asset class that has taken the financial world by storm. Cryptocurrencies like Bitcoin and Ethereum are digital or virtual currencies that use cryptography for security. They operate independently of central banks and governments, relying on a decentralized network of computers to process transactions and verify ownership. One of the main appeals of cryptocurrencies is their potential for high returns. We've seen Bitcoin and other cryptocurrencies experience meteoric price surges, creating incredible wealth for early adopters. However, it's crucial to understand that cryptocurrencies are also highly volatile. Beyond their investment potential, cryptocurrencies also offer the potential to revolutionize various industries. Blockchain technology, the underlying technology behind cryptocurrencies, has the power to transform everything from finance and supply chain management to healthcare and voting systems. If you're considering dipping your toes into the world of cryptocurrencies, it's crucial to have a solid understanding of the risks involved and to approach it with a cautious and informed mindset. Chapter 7. Commodities, tangible assets in an uncertain world. Commodities are raw materials or primary agricultural products that can be bought and sold. Think of gold, silver, oil, natural gas, corn, wheat, and coffee. Investing in commodities can diversify your portfolio and hedge against inflation. Commodity prices tend to rise with inflation. Gold is a safe haven asset during economic uncertainty. Invest through futures contracts, ETFs, and mining stocks. Commodity prices can be volatile, so approach with caution. Chapter 8. Collectibles, passion meets profit potential. Let's step into the world of collectibles, where passion meets profit potential. Collectibles are items that hold value beyond their utilitarian purpose, often appreciated for their rarity, historical significance, or aesthetic appeal. Think of things like vintage cars, rare stamps, antique furniture, fine art, sports memorabilia, and even rare Pokémon cards. Investing in collectibles can be a thrilling and potentially lucrative endeavor, but it's not for the faint of heart. Unlike stocks or bonds, collectibles don't generate income or dividends. Their value is derived solely from their desirability and the willingness of buyers to pay a premium for them. The key to success in collectibles investing lies in thorough research, authentication, and careful acquisition. It's essential to understand the historical significance, rarity, condition, and market demand for the specific items you're interested in. Remember, investing in collectibles should be driven by passion and a genuine appreciation for the items themselves. Chapter 9. Intellectual Property. Monetizing your creativity and innovation. Let's explore the world of intellectual property, or IP, a valuable asset class that often flies under the radar. Intellectual property refers to creations of the mind, such as inventions, literary and artistic works, designs, and symbols used in commerce. Owning intellectual property can be a powerful way to monetize your creativity, innovation, and brand recognition. There are various types of intellectual property protection, each with its own set of rules and regulations. Patents protect inventions, granting the patent holder exclusive rights to make, use, sell, and import the invention for a limited period. Trademarks protect brand names, logos, and other distinctive signs that identify and distinguish goods and services in the marketplace. Copyrights protect original works of authorship, such as books, music, films, and software, granting the copyright holder exclusive rights to reproduce, distribute, and display the work. Owning intellectual property can generate significant revenue through licensing agreements and royalties. Protecting and monetizing intellectual property is crucial for businesses and individuals alike. Chapter 10. Businesses building your empire brick by brick. Building a business is challenging but rewarding. It requires dedication, risk tolerance, and relentless pursuit. The satisfaction of seeing your idea come to life is unmatched. Identify a problem, fulfill a market need, and offer value. Remember, entrepreneurship is a journey, not a destination. Thanks for watching. If you found this video helpful, make sure to hit the like button and subscribe for more content on wealth building and investing. Let us know in the comments which asset you're most interested in. Remember, building wealth is a journey, not a race. It takes time, effort, and a willingness to learn and adapt. But by understanding the different asset classes available to you and making informed investment decisions, you can set yourself up for long-term financial success. See you in the next video.